name is Ben Nathan from the Forex Mentor Fund Trader Academy, and welcome to this free video tutorial on how to trade the non-farm payroll. Now, as we all know, the non-farm payroll is one of the most volatile inducing news releases of each month. Generally, it's released every first Friday of the month at 1:30 GMT. So I want to show you how to trade this important news event. Now, do bear in mind it's a very high volatility event, so risk should always be kept very, very small when trading this, okay? But we'll go over the theory and how you'd want to trade this successfully. So we go over to myfxbook.com, which I find a useful tool just to give you a rundown of the important news results and what they mean for the markets. Now, what we do within the Fund Trader Academy live trading room, we do provide access to a news feed pod along with a live news audio squawk, which is done by Forex specialists every day. Now, the thing with the audio squawk we provide, the figures come out generally a minute or two before most of the other services, so it gives you the figures you want to know in advance, if you like, so you can get onto the moves before they happen. Okay, so let's go over non-farm payroll then. What is the non-farm payroll? Well, my FX book explains it nicely. The non-farm payrolls released by the US Department of Labour presents the number of people on the payrolls of all non-agricultural business. Okay, as we know, monthly changes can be very volatile. Generally speaking, a high reading is positive or bullish for the dollar, while a low reading is seen as negative or bearish for the dollar. So what we'll do, we'll use the pound dollar chart as an example. As you can see, I've got that loaded up ready to show you so we can see exactly what happened. So going back to the chart, to my FX book, sorry. So last month's figure was 193,000, okay? So that's the number of people on the payroll of all non-agricultural business, so 193,000 people, okay? So the expected figure for this month, that's October, was 180,000, okay? So that means that the expected figure was that the non-farm payroll was going to be less than the previous month. That means there's less people on a payroll of non-agricultural business, so that means there's less going into the US economy in terms of tax, etc. So overall, if it's lower than the previous month, that's bad for the dollar. If it's higher, then that's good. So it was expected to be lower. So following that expectation, we'd expect a weakness in the dollar, which means the pound dollar pair would go up. Okay? When the figure was released, the figure came out actually less than the expected result and much less than the previous month. So that's very bad news for the dollar. So the instant that news came out, I'll be hitting buy on the pound dollar pair. Okay? So remember, it's weak news for the dollar, so that means the pound dollar pair should go up. So again, let's just forward through, see what happened. As you can see, as soon as that news was released, bear in mind this is a 5-minute chart, within 5 minutes we saw a rise of 72 pips. Okay? That's exactly how volatile these news reports are. Now if we go to a random other pair to see what happened in the other direction, i.e. a dollar pair, so dollar CAD, dollar Swiss or dollar yen, you'd expect all those pairs to drop as soon as that news came out. So let's have a look and go back. And as you can see, here's the candle that was affected by the news report, and again we have a massive drop by 35 pips. Again, on the dollar Swiss we have a drop in the first candle by 67 pips, and on the dollar yen, again we had that spike down by around 30 pips. So that goes to show how volatile the NFP is. However, it also goes to show how easy and simple it can be, because ultimately there's going to be either good news or bad news for the US dollar. Okay, so if figures are lower than expected, then it's bad. If figures are higher than expected, then it's good. So either way we trade, as soon as we hear those figures, we set a trade up or just enter the market straight up and trade in that direction. And then as soon as the 5-minute candle closes, just exit the trade, because you'll make a good 30 to 50 pips most times. But just make sure your stop loss is very small, i.e. you never want to risk any more than sort of 5-10 pips on these trades, because if it does go in the other way, i.e. if the direction of the market goes against us, we want to be out. We don't want to be losing 50-60 pips. So at least then, if we have a 10 pip stop loss, then when we get to make that 50 pips or so, that's a 5-to-1 risk-reward ratio, which of course is really nice for our trading. So that's a nice little insight on how to trade the NFP. Hopefully it's a very simple approach, but watch it yourself over the next couple of months and you'll see that it's extremely effective in making some fast pips during this volatile news announcement. Okay, so we cover this kind of thing and all sorts of other lessons as well in the live trading room. As I said, we do cover these moves before they happen, but this is just a little bit of an insight into the kind of reasoning and the kind of simple approach we take when teaching you to trade the markets. So head over to forexmentor.com/FTA now, it's in the link, and feel free to check out what's on offer.